What's going on, YouTube? It's your boy Ace Billions. I'm a commercial real estate broker and investor, and I'm building elite capital to connect serious investors with real assets, real opportunities, and real wealth building strategies. All right, so today we're talking about creative finance for commercial real estate because the people who understand this structure will always have an advantage over the people who only understand the price. The first thing you got to understand in this is commercial real estate is not just about buying properties, it's about solving problems. See, a seller may have a property, but they also have a situation. Maybe they tired of managing tenants. Maybe they have vacancies. Maybe they are ready to retire, or maybe they just sitting at a low basis and don't want the massive tax hits. Maybe the property has deferred maintenance. Maybe the rents are below market. Maybe the bank won't give a traditional buyer the terms they need. That's where creative finance comes in. Creative finance isn't about tricking somebody. It's about creating a structure where both sides can win. The amateur is only going to see the asking price, but the investor, they see the seller's motivation, the debt, the income, the expenses, the upside, the tax situation, and the exit strategy. And then the deal may close faster because you're not fully dependent on the bank. That's creative finance. Now, obviously, the numbers got to make sense. The property still has the cash flow. The legal documents have to be tight. And you need attorneys, accountants, and the proper due diligence, of course. But the principle is power. You don't always need more money. Sometimes you need better terms. A lot of the time, that's why two people can see the same property and one sees a deal and the other one doesn't. One can make it work and the other one can't. It's because they have the right structure. Let's use seller financing as an example. In a traditional deal, you can go to the bank, you can get a loan, you can bring your down payment, and you can close. But with seller financing, the seller acts as the bank. Instead of the buyer paying the seller all cash at closing, the buyer would or can give the seller a down payment and then make the payment over time. So let's say a owner owns a small commercial building free and clear. They want $2 million for it. A traditional buyer might need 500,000 or more down when you include the down payment, the closing costs, reserves, and improvements. But what if a seller is open to carrying a note? Then maybe you can offer 200,000 down and the seller will carry the remaining 1.8. You pay them monthly over a 5 to 7 or even 10-year term. Now the seller gets the income, the buyer gets control of the asset. I feel like this is where most people mess up. They negotiate the price, but they ignore the terms. But in commercial real estate, terms can be more powerful than the price. A property at $2 million with terrible debt, high interest rates, and no cash flow might be a bad deal. But the same property at $2 million with seller finance, interest only payments, flexible terms, and clear value add plans could become a strong deal. The question isn't just what's the price? The real question is what's the down payment? What's the interest rates? Is there an interest only period? When does a loan mature? Can payments be deferred? Can the seller carry a second position? Can we assume existing debt? Can we bring in partners? Can we raise capital? Can we improve the income? Can we refinance later? And that's how investors think. I've realized that one of the most important concepts in real estate is control. You don't have to own 100% of everything to be wealthy. You need to control an asset, control the deal flow, control relationships, and control the upside. And that may mean using seller finance. It may mean a master lease option. It may mean bringing in equity partners, negotiating joint ventures. It may mean tying up the property under contract until you raise the capital. It may mean finding an off-market deal and bringing the right operator, lender, and investor into your group. And that's why I think commercial real estate is so powerful, because you can create value before you even own the asset. You can create value by finding the deal. You can create value by structuring a deal. You can create value by solving the seller's problem. You can create value by improving the property. You can create value by increasing the NOI. And when you can increase the NOI, you can increase the value of the property. That's the game. So here's the mindset I want you to take from this. Stop asking, can I afford this? Start asking the right questions. Like, what problem can I solve for the seller? What is their current income? What's the future income? What is the debt situation? What's the structure and what will make this deal work? Who do you need to team up with? What will make this deal attractive to investors? That's how you move from being a spectator to being a deal maker. Because wealth is not built by people who only look at what they have. Wealth is built by people who know how to use structure, leverage, relationships, and strategy. That's the difference. So if you're a business owner, you're an investor, a high income professional looking at commercial real estate, understand this. You may not need to buy the biggest deal today, But you do need to understand and learn how to structure these deals. Because once you understand structure, you stop thinking small. You stop waiting for the perfect conditions and you start seeing opportunities that other people miss. So follow me for more commercial real estate investing and wealth building breakdowns. And if you're looking for off market commercial deals, uh, any off market opportunities, or want to understand how to position yourself as an investor, connect with me. This is Ace Billions with Elite Capital. Don't just chase money, learn how to structure it.